And the confidence levels among the business community in South Africa remains under pressure as results from the South African Chamber of Commerce and Industry's Business Confidence Index has shown a dip. Sacci says the results from the survey of business leaders in the country is that it is evident that the BCI has seen a substantial upward momentum. For more on the findings of the survey, we're joined by Richard Downing, an economist with Sacci. Richard, thank you very much for your time this evening. It seems wherever one looks, the third quarter of 2023 in particular is not doing well in South Africa economically. Whether you're looking at the ABSA PMI or S&P PMI, among other indicators, they are all down. It seems the third quarter is really struggling.
Yeah, well, I think just to make it clear, what we do is it's not we don't survey business and ask them what do you think about the economy. What we're doing is we're tracing certain developments in the economy and in markets, and then we put it all together into an index because we believe that information is feeding sentiment of business that reflects the business climate to some extent, and that is what we're measuring. So the Sacci Business Confidence Index is a composite index of important indicators in the arena of business that reflects their sentiment, and this is what we measure. So we say if you take 2000 as 100, the index at the moment, that is September 2023, stands at 108.2. And that is slightly down from 108.6 in August. It's quite a distance from December last year. We saw the index around 117 index points. So it's down quite a lot from there. And I think what actually happened there is we suddenly realized, the business realized what damage is done by load shedding to some extent, and the supply of important input in terms of activity, and that is electricity. And then suddenly the index started moving downwards from 117 to where we are in September at 108.2. So it's not a good level to be at. It's even worse than last year, September, by 2.7% index points as such. So we're not on a good spot at the moment. But there's a lot of structural issues that actually, is reflected in the economy that has affected your public sector to a large extent in terms of revenue, in terms of needs, and trying to finance all the needs. And that is creating a bit of a problem. And of course, also as the economy is battling, you also have consumers suffering, and this is what is actually reflected to a certain extent in the Business Confidence Index, and to which business must react and decide whether they want to invest or whatever the case may be.
But there are some green shoots when you look at the results of this particular index, because over this medium term, increased tourism and higher precious metal prices made those notable positive year-on-year contributions.
Yeah, well, there was some. I mean, there's a lot of difficult issues at the moment. We know that we've got high real costs of finance because of interest rates that rose, and inflation that is still a bit of a problem to some extent, and the Reserve Bank actually warned again, against the inflationary process not completely under control, and we saw what happened to fuel prices again. But there is some positive, and I think one of the positive is actually our relations with some international partners in terms of trade, that is imports and exports. And if it wasn't for that, this index would have gone down further. So it's important to nurture that links already established from whatever source it may be. Large investment from the Western Europe and the United States, and of course then there's a lot of trade with Asian countries, and that is important actually to keep things going, because South Africa is quite a big and open economy. It's largely dependent upon imported goods and services, as well as export markets. And that is why it's important, and that actually kept the index into reasonable levels, although 108 is a level that is under pressure still, and we could do much better if we can address some of these structural problem areas that we're facing at the moment.
Richard, let's talk about the impact that the austerity measures that are being mooted for ahead of the midterm budget are going to have on sentiment, and particularly on business confidence. And this is important when it has been noted that addressing the current fiscal challenges, there is that renewed emphasis on preserving debt servicing capacity in public finances.
Yeah, I mean, Treasury and the Minister of Finance has actually indicated, that to some extent they are facing quite a large demand for services and to extend that and so on. But the simple fact of the matter is there is no more resources actually to be dished out. On the revenue side, we have a problem because an economy that's growing at about 0.5% in real terms to 1%, isn't actually going to provide the revenue that you need to provide all these needs. And therefore, what is important actually is to structure the economic policy and your human capital and investment capital to such an extent that you can create growth. Unfortunately, there's a lot of damage that was already done as we sit here, as we can see from this business confidence index, that it'll perhaps not be immediate to fix things, but at least one must start somewhere at a time. And I think that is what we have to address, and that is what we call in terms of the structural. I mean, if you take the government services, there's a huge remuneration of employees component that is perhaps overstepping what is affordable. And that type of thing is, one must sort of look at that, and I think that's what we're looking at. We know that's essential services that must keep going, but we must make sure that there's value for money in terms of where government is spending, whether it's on local government, whether it's on central government, whether it's on provincial level, or on especially on the state-owned enterprises, to make sure that you get value for money in terms of the services paid for. And I think that is the important thing to get the economy going again. But I don't think there's any quick fix. Unfortunately, the fiscal position of central government as such is very difficult at the moment. So we can't blame anybody for that. I mean, that is being created over a number of years, of course, that we're sitting in a situation where we are now. And there was numerous times where there was sort of attention drawn to the fact that the government must make sure that service provision is at what is affordable. And I think that is what we must look at structurally to see what is the best way to go about in trying to bring down your debt levels in government, and especially your state-owned enterprises, and to make sure that you actually provide the services which is paid for.
Richard Downing is an economist with the South African Chamber of Commerce and Industry. Thank you very much, Richard, for your time this evening.